Hey crypto kids, welcome back to another video, and in today's video we're going to be looking at Bitcoin's price chart. So we're going to start off with Bitcoin's weekly time frame, then we're going to head into Bitcoin's daily and finish off with the 4-hourly time frame. Now, all of these charts have something very unique and important to offer, so I would definitely recommend watching until the end of the video. But guys, make sure to leave a like and subscribe to the channel if you haven't already, and turn on the notification bell. It would be very much appreciated. And of course, especially in the bull market when price tends to move at a rapid pace, you do not want to miss the uploads when I post them. So again, I'd recommend turning on the notification bell. So let's start off with Bitcoin's weekly chart because things are not looking too good on the weekly, honestly. So I have two different indicators, which I'm going to explain in a second. But before I do so, and before I forget, I have two of my personal preferred exchanges linked in the description below. If you want to give them a try, then if you want to, you can use the links down below. For Bitflex, you'll actually be able to participate in future giveaways that we hold with them. A new one is coming very soon, so stay tuned for that. And for Bybit, you'll get a nice deposit bonus. But let's jump back into Bitcoin's weekly chart. So I have two different indicators, like I mentioned. The first one is the simple moving averages, and the second one is the parabolic star. Now, the moving average combination I actually really like to use on the weekly. It's called Consensio. It's a very old trading strategy. It's pretty effective. So it's the 3, the 7, and the 30-day period moving averages, and I like to use them only on the weekly time frames. Now, if we have a look at these MAs, it's not looking too good. So I'll do a quick demonstration. Now, basically, the red one is the short-term moving average, so that's the 7. The yellow is the 7-day, and the blue one is the 30-day moving average, right? So whenever the short-term SMA crosses under the midterm SMA, usually you can expect a midterm price correction. And once all of them cross below the long-term one, or at least when the midterm crosses below the long-term one, I know it's getting a little bit confusing here. It's usually it's going to lead to a bearish trend, and of course the vice versa applies too. Now, as you can see, the last time we had a cross up was around about here once they all crossed above the long-term MA, and we led to this big price increase. And now it looks like if we continue trading at these prices on Bitcoin, we can have that bearish crossover once again towards the downside. And the last time we had that bearish crossover was actually back in 3rd of January in 2022, which of course led to this massive bear market, and we had a perfect retest right over there on the 28th of March. So this is actually pretty critical and is concerning me on the weekly time frame. We're at important support, but if we break below it, then I think the bearish trend will continue on. It's likely that given the daily time frame, which I will have a look at in a second, we could perhaps pump back towards this blue MA, but I think a rejection is very much possible if that happens, and we can come back down to 25.2K. So that's what I'm expecting. If I look at the weekly time frame, I'll just sum it up again. I think a short-term pump is possible from the level that we're at back up to this moving average at around $27,300, and then I think we can dip back down towards $25,200. But guys, remember, nothing in this video is financial advice, of course. This is just my personal technical analysis only. Technical analysis is never perfect. It's just a good mathematical edge that you get upon the market. So always make sure to do your own research. That is very important. So ladies and gents, that is the weekly time frame. Now let's shift into the daily chart for Bitcoin. And meanwhile, I want to discuss Jackson Hole. So we had Jackson Hole. If you watch my live stream, it's a very important economic conference that happens, I believe, every year. And it's basically when all of the policymakers, the top economists come together and join up and discuss the United States' future in its economy. And a lot of global economists also joined this conference. And we had the Powell speech. The Fed Chair Powell gave a speech during the conference. I believe it was last Friday. And he talked about very tight monetary policy. Now, the markets were expecting it, so I'm going to quickly have a look into the S&P 500. The markets were expecting it, so we had this dump already on this candle right there, and then we saw the markets dip further below and close at around 4,400. So we closed back above, which was nice. We didn't continue lower, but we had a big gap towards the upside, and now we're trading at around 4,418. So I will discuss that later on in the video because that is, of course, very crucial too. So let's get back into the daily time frame. Now, on the daily time frame, we're forming this bear flag for Bitcoin, which is not looking too good. So this bear flag, right, there's two potential scenarios here. Either we break below the support of this bear flag and continue down to 25.2K initially, and then of course if we break that, then we can go back down to, in my opinion, 24,200, $24,000 is a good level. I'll check that again on the weekly time frame for support. Or what could happen is we can form a double bottom over here. And if we form the double bottom and we break above this $26,600, then the situation I discussed on the weekly could happen and we could trade back up to $27,000, 27.3K. That could be a potential. In that situation, I would be looking to open a potential long position if we break 26.6K. So that is what I'm looking at on the daily time frame. But some good news for you. We're looking like the MACD is crossing towards the upside. That should be confirmed on today's candle. Today's candle will end in a few hours. So if we close like this, then this bullish crossover will be confirmed. We're looking at the histogram too. The histogram is starting to reverse back into the green. So that could cause a small move back up to the 26.6K and then continue on perhaps to the 27.3K. Now on the 4-hourly, again, we're trading in this channel. Don't really need to look at those oscillators there. But if we look at just the price chart, again, we're consolidating within this range, and there's a range within the range between 26.2 and 25.8. So in the coming hours, or hopefully tomorrow, we break this range somehow, either up or down, and then according to that, we can open our position. If we break the support, then 25.2K is our initial target. If we break up, then that's going to be 27.3K. So we will be observing the markets in that situation. And of course, I will update you if anything happens as such. So let's end off the video with some macroeconomics. Now, I do believe that in the long term, the macroeconomic structure is not looking too good, just in the United States alone. So, there's a bunch of factors, and I'll talk through some of them. The first one is the housing market. The housing market has just gone up so much because institutions are buying up and houses are getting very expensive. Mortgage rates are very high, meaning people will have to pay much more money to the bank once getting their loan out. So buying a house is also very expensive. So people are opting out from doing this. Now, in addition to that, inflation is high. So people are not buying high order goods, such as buying a car. It's too expensive. He needs to ration that money, save it up, and pay for food, pay for necessities. People are not investing in the stock markets because, again, he needs to ration that money and spend it on food and necessities. What happens there is the economy begins to slow down. Once the economy within a country begins to slow down, then you enter into a recession. In fact, Michael Burry, if you don't know him, Google him up. He's the guy that called the previous big recession in 2008. So he opened a big short in the markets very recently. So the United States economy is not looking too good. And of course, especially with the BRICS collaboration now, and if they stop using the United States dollar within their trade, the dollar can also lose its value. Now, if the dollar loses its value and the United States enters a recession, then it won't be too good for the markets in terms of the traditional stocks. But BRICS is looking very interesting, so I would keep a close eye on that. How is that going to affect Bitcoin? Well, I can't comment on that. Honestly, we have to watch and see if banks struggle, then that could cause Bitcoin to go up. But as I said in my previous videos, the only thing that I'm hoping for at the moment is for the 2024 halving. If the 2024 halving, accompanied by the ETFs, don't cause Bitcoin's price to go up, then I'm going to be a little bit bearish, I'm not gonna lie. Then that's the point where I'm gonna lose my hope. But guys, that was an extensive video. I'm gonna leave it there. Thank you so much for watching. I hope you did enjoy it. If you did, again, make sure to smash up that like button, subscribe, and turn on the notification bell. And guys, I will see you in the next video very soon. Everyone, have a good day, take care, and bye-bye.